Speaking about those markets, let's talk about the potential opportunities for investors as they try and figure out if we're near a bottom. Joining us right now is Sarat Sethi, who is managing partner and portfolio manager at DCLA, also a CNBC contributor, and Stephanie Link, chief investment strategist at Hightower and a CNBC contributor as well. Sarat, every data point we hear, we come up with a new scenario about really what's happening. We're trying to piece things together. We're at an inflection point, and it's critical to try and take as many of those data points and put them together as you can. What are you thinking from what you've seen lately?
Becky, you're absolutely right. This is a complete mosaic theory, right? We're seeing J.P. Morgan coming out, hey, things are good. Things are getting better. Credit's not that bad. And then you get snapped the next night. And now you've got retailers going, whether it's Walmart or Target or Nordstrom. So I think you really have to, as Wayne Gretzky says, go where the puck is. Go to the companies that have strength. So, we've been liking financials for a while, but go with the high quality ones. Go with the J.P. Morgans, the Morgan Stanleys. Go with the Blackstones of the world that have capital to deploy. And then when it comes to other areas of the market, go with strong balance sheets and companies that have much more of a cash flow duration than, hey, you know what, we had a really good pull through. You made a really interesting point that, people were buying things during the COVID, and now that's happening in software, it's happening in hardware, it's happening in industrial goods. So really look for where there's going to be demand and what the consumer, which is 70% of our economy, has not been buying.
Yeah, Stephanie, it's hard, though, to figure out where the puck is going when you're dealing with the consumer because things are changing so rapidly. I mean, it's confounded some of the best operators we've seen on the consumer products in the retail line.
Yeah, this is a very challenging time in the market's very choppy, and the reactions to negative news is so extreme. I've never seen it in my career, to be honest with you. So much is going on. Everybody's talking about recession. I think that's premature, Becky. So what we've learned is that the consumer is changing their behavior. They're not buying goods. They are buying services. That's actually pretty good. Services is 70% of U.S. consumption. So we root for that, actually. We also are learning that inflation and high interest rates are having an impact, not only to the consumer, but to companies. They can't forecast properly. So I kind of step back and I say, what do we learn about the economy, the data points? And the economy still has a lot of momentum, right? I mean, GDP, if you exclude inventories and exports, consumption was up 2.7%, business investment up 9.2%. PMIs, I know everyone was saying that they missed yesterday, but they're still well above 50, and that's expansion, right? Industrial production, capacity utilization, all these numbers were really very good in the month of April. So now we have to see going forward. I know everybody's focused on Walmart and Target, but let's focus on something like TJX that actually delivered and raised their margin guidance. And also what I found interesting is Chanel beat. They had total revenues up 23%. Ralph Lauren, they beat both on the bottom line and top line. And Nordstrom said their designer and shoe business really helped their comps because people wanted to buy things for occasions. So again, that's that services part of the economy. Services and high end are actually still doing pretty good.
What do you make of Dick's, though? I mean, they came out with numbers today that disappoint. Well, the guidance that disappointed. They've got inventory at 40% levels. What the heck happened?
Yeah. A beneficiary from stay at home, right? So how many tennis rackets do you need? How many ice skates do you need, right? That kind of thing. And that's what's happening, right? They're the goods part of the economy versus services.
So those companies, the goods part of the economy, was still stocking up, assuming that consumers were going to be spending like that for a lot longer. All of a sudden, people got back out, or they just don't need the same stuff like the patio furniture that they were buying last year. They've already bought it. And that was the turn. I mean, you point out that the negative implications, the punishment that you get on Wall Street for bad numbers is more than you've ever seen in your career. Does that mean that you think that there are opportunities? Was it too much of a takedown, or is this a big takedown that's a big takedown just because those stocks were up so sharply before?
Yeah, I own, in full disclosure, I own Target. I think that is absolutely a buy. I mean, the stock is down 35% in a couple of days' time. Walmart is certainly interesting. I think Costco tomorrow is going to be a very good number. They're going to hold up pretty well. As I mentioned, TJX, I do own TJX. I'd be buying that all day long. It's still down 19% on the year, and they're guiding numbers higher. So I think that there are opportunities. I don't want to own a lot of the goods companies, but I think that there are special pockets. I am more in the camp of you want to own some of the the reopened names, and that's the services piece.